This week I'm here to ask for your help. Help in using the legislative process to protect one of the most common tax planning techniques that we as proactive planners use for small business owners. Right now, the Senate is discussing H.R. 4213, and while this bill contains many beneficial elements, such as extending unemployment benefits to those who are out of work, there's also some major changes that will come to the tax code as a result if this gets passed. So let me start out by giving you a little bit of background on the S Corp and how we use S corporations to help you pay less tax. Now, if you're a sole proprietor owner, or if you're a partner in a partnership, or if you're in an LLC taxed as a partnership, everything that you earn in the business minus your expenses, that equals your net income, and that net income is subject to self-employment tax. This comes in addition to regular income tax. It ends up being about 15.3%. and it represents Social Security and Medicare paid on your earnings as a self-employed business owner. For years, tax planners have used S corporations to help reduce the amount of self-employment tax that you pay. And the way we do it is this. In an S corporation, the way it works, it's a pass-through entity. And so the corporation itself doesn't pay tax. Rather, the earnings are reported on an individual's tax return, and then you pay income tax on those earnings on your 1040. Now, the way an S corporation works as far as self-employment tax goes is you can split your earnings in an S corporation between a reasonable salary, and then you simply take the rest of your profits out as a distribution. The salary, of course, would be subject to Social Security and Medicare tax, as wages normally are. But the distribution part is not subject to self-employment tax, so you can create a lot of tax savings there. And this is used all the time. Now, one of the elements of H.R. 4213, and the reason why we as tax planners are uncomfortable with this, is because it gives an unfair advantage to large service S corporations. The elements of H.R. 4213 say, as proposed, that small service S corporations would also have to pay self-employment tax on the distributions as well as the salary, while their competitors, who may be large service S corporations, would receive the same treatment that they've always enjoyed, saving the tax on the distribution part. And this just isn't fair. If Congress is really out to do real tax reform, they would make changes across the board. And that's why we're not comfortable with this bill as it currently reads. So, you can make a difference, and I implore you to please contact your senators now and tell them that you don't want small professionals to be discriminated against in favor of the big guys. I'm attaching a link to this vlog so that you can click on it and find the contact information for your local senator and tell them it's not good for business. Click on the link below and please forward this message to anyone in your contact list. We all need to band together to use the power of the legislative process to make sure that what changes are being made are right for business. Until next time, remember that certified tax coaches are trained to help you keep more of what you earn. And it's really not about how much you earn that counts, but it's really about how much you keep that's important. Until next time.